The property scaling playbook that worked for the last decade doesn't work the same way in 2026. And if you've hit your borrowing limit, you already know it. Because when the bank stops lending, the game shifts from growth to survival. Not panic, not doom. Survival means making sure you're still standing in 10 years. This happened to me more than once. Realistically, you can either push through or you can reconsider and change strategies. But let's go through your options that you have whenever you get stuck by the banks. Option 1. Increase your income. This is the cleanest solution and it's relatively simple. Earn more. Higher income improves serviceability and unlocks borrowing power, but it's slow, and most people can't just add $50,000 to their salary overnight. So while it's the best long-term lever, it's rarely the immediate fix. Option 2. Find new lenders. Now, this is what I did, and this is where most investors go next. Second-tier banks, private lenders, family money. If the bank won't fund you, someone else will. And that can work. What are the pros? Well, you have faster capital, fewer servicing constraints, they'll often just throw money at you, continued portfolio growth, you can actually continue to grow your portfolio, and you get the leveraged upside of a bigger portfolio and a higher gross net worth. But leverage doesn't just disappear because it's private. So what's the downside? Well, you have higher interest rates. You've got to sweeten the deal somehow because it's higher risk and they don't actually own the asset. You're working with shorter timelines. Often they're going to be working on a 5 to 6, maybe a 7-year loan term as opposed to a 30-year like with the banks. Repayment pressure. There's often going to be a large amount of repayment pressure and they probably are going to want their money back, not on your timeline. Illiquidity risk. They're going to want their money back and look, property's not a liquid asset. You can't just sell it super quickly. And sometimes interpersonal drama. People get upset when money's involved. More leverage might restart growth, but it also increases fragility. Option 3, you can pay down your debt. Now this one isn't exciting, but aggressively reducing your loans is an option. Every dollar you pay off earns whatever your interest rate is. It strengthens cash flow, it lowers stress, and it builds usable equity over time. After a while, you can redraw it and go again, or you can just sit pretty knowing that you're in a better equity position. It doesn't feel like scaling, but it improves survival odds as well dramatically. And option 4, you can reallocate your capital. This is where the game shifts. And instead of asking, how do I buy the next property? You ask, how do I allocate capital intelligently? Maybe that means selling one of your weaker assets, rebalancing some equity, diversifying into precious metals, ETFs, or crypto, adding some liquidity, maybe holding a bit more cash, and reducing your concentration risk. This is where wealth building transitions from getting rich to staying rich, because getting rich and staying rich are two different skills. Black swan events don't announce themselves. They expose over-leveraged portfolios. As Morgan Housel likes to say, things that have never happened before happen all the time. At some point, leverage stops being a tool and starts being a liability. I've used all 4 of these strategies at different times, but today I optimize for resilience, because once you've built the momentum, the goal changes. It's no longer about maximum growth. It's about making sure that one shock doesn't wipe out a decade of progress. So when the bank says no, that's not the end. It's a signal that the growth phase may be over and that the allocation phase has begun. So the real question isn't property or ETFs. It's how much risk are you carrying without realizing it? If this gave you something to think about, let me know in the comments what stage you're at, still scaling or shifting towards preservation, and I'll see you in the next one.